news is, look, inflation is coming down. The bad news is that doesn't mean prices are falling. They're just going up more slowly. But our economy's been incredibly resilient as the Fed has raised interest rates. Economic growth has remained positive. Unemployment has ticked up a little bit. We still think the labor market is supporting the U.S. consumer. But over the next few months, we're going to see the Fed lower interest rates fairly significantly. So that should help from an economic growth standpoint as we think about moving forward. Now, there are still some issues that we're going to discuss around the size of our national debt and what that may mean to us longer term. In the short run, that's been highly additive to economic growth. That's the positive side of it. In the long run, that money has to be paid back at some point. So we're going to have to think about some things from a fiscal standpoint as we move forward. We do need to think about how the policy differences of the platforms, which are pretty wide this year, around energy, around immigration, around tax policy as we move into 2025. So there's some possibility of some big differences from a platform standpoint, but it's not just the presidential election, it's how's the makeup of the Senate and the House as well as to what can be done. But in general, the election today looks like a toss-up. It's hard to say. The stock market has been a little more volatile recently. Our sense on that is that's just because of the uncertainty of the election. It's not a question of which side is going to win. But changes to investment strategies at this point in time based on the election, we think are just speculative in nature. We haven't done that. We'll get more clarity as we move forward.